Hello everyone, this is today's video analysis for October 9, 2019. Today we're going to take a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. Starting here on the daily time frame, three things I want to point out first before we zoom in is the three different trend lines you see, the red, blue, and the black trend lines. What I've done here on this chart is taken the Fibonacci tool on MetaTrader 4 and drawn out Fibonacci of all three of those ranges, the red line, the blue line, and the black line. What Fibonacci really does is helps us identify naturally recurring patterns in the market. That's what Fibonacci is. It's a mathematical representation of naturally recurring patterns throughout nature. And what we do is we apply that to the market to help us identify points of potential resistance and support. It helps project resistance and support using those naturally recurring patterns. And when we can draw Fibonacci of multiple different ranges and they start to converge together, overlap on top of each other, it really gives us a pretty good sense of where those naturally recurring patterns within the market are. So I just wanted to start in this viewpoint so you can see that I've drawn it from those three different ranges. Now that we see that, let's go ahead and move in a little bit. And what's probably the most important about that today is that this orange shaded area right in the upper middle portion of the chart is where we see a convergence of several different Fibonacci measurements or levels converging right there into that orange shaded area. The past 3 days have been finding some resistance into that orange shaded area, and it really doesn't matter what the numbers of those levels are, whether it's a 382, 618, 236, 886, really doesn't matter. What we see is there's this convergence. All those dashed blue lines there are some form of Fibonacci level of those three ranges sitting inside there. Another interesting part is, so is the green shaded area. You can see a couple of levels or those dashed blue lines sitting inside that green shaded area where the past 2 days has found support. A little bit lower would be the pink shaded area down here towards the bottom of the pink zone. We could see some of those levels converging together. And if I go to the upper pink zone, top of the black box, you can see some of those levels converging together. So I think that's very interesting for us and gives us maybe a higher expectation of resistance into that orange shaded area. Something else interesting about that resistance orange zone and the Fibonacci level sitting there is just above it is the 100 period simple moving average here on the daily time frame. 100 period, no bells or whistles to it, just a simple moving average. 100 period here on the daily time frame sitting above here. So that again increases our confidence, our expectation of resistance here at the orange zone, and really we only expect it would go higher if it could bust on through that information and continue to go higher. So at least right now, I think it's more important for us to look at this as resistance, and more likely our trading action or our expectation would be looking for short or sell opportunities rather than long. Buying right now, at least this week so far, today's Wednesday, so we have Monday, Tuesday, Wednesday, now finding resistance at the orange zone. Buying here has made little sense over the past 3 days. So I don't think we buy here. I think we're more likely to look for opportunities to be short. Obviously, in the past 2 days, the best place to buy would have been the green shaded area, but we're not there. So that doesn't become our opportunity for the day. Our opportunity is looking at resistance where Fibonacci, moving average, the orange shaded area all converge together to increase our confidence as a potential resistance and selling point for the US yen. 4 hour time frame doesn't really change any of that. We could just really see what's happening here. All those lines again helping us identify resistance. If you decide to begin looking at this as a short opportunity, you have maybe a little bit more aggressive, more conservative ways to look at it. Aggressive, you're probably already selling with your stop loss above the orange zone, because at this point we don't want it to get above there, right? So more aggressively, you're probably already selling. More conservatively, you're going to look for selling pressure here. Watch for the dollar to find its resistance today as well. Potential short opportunities there. Again, probably the best place to go long would have been down here at the green zone. Now, if you're not really keen to take a short here, the other opportunity would be to wait for it to break above all of that, get above 107.50, 55 or so, and then you might look for an opportunity to go long, targeting higher levels, blue and the pink zone at the top of the chart. So I don't think you buy right now, but above the orange zone maybe gives you an opportunity to buy it. Until then, potential intraday shorts into the orange zone for the dollar yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.